with Gautam Shah. Let's say hello and good morning to him and understand what he makes of the current market action. Good morning. Thank you for joining us. It's been a spectacular comeback for the market. Small and mid cap indices are at an all-time high. Nifty is barely 4-5% away from its all-time high. Has this typical cyclicality of bearishness, is that over? Are we in for a good patch which could last for next couple of weeks and months?
Good morning, Nikunj. Well, yes, it looks like. I think you could have said this for the last 18 months every single time because markets have come back strongly every single time. I think the screen has looked a lot vibrant. The participation has been excellent. And every time the market gets a little overbought or needs to discount some negative developments globally or locally, it needs to get into a bit of a pause. And that pause can sometimes last for a few weeks, sometimes for possibly 6 to 8 weeks or a couple of months. And thereafter, things get back on track. So there has been a complete change in sentiment. As I said, I think the screen has looked very good in the recent past. And it does seem as if we did make some sort of a bottom at that 23,300 number. And the kind of stocks that have really led this rally, which is IT and banking, I do believe that there is more to come. I think there is a clear battle between domestic money and the economic headwinds. I think that's the battle which is at play, which means that the markets might not go on to make new highs in a hurry, which has happened multiple times in the past. I think we'll still stay in a sort of a range. 25,500 sort of will be a ceiling, and the recent lows, I think, and the 24,000 area will be a sort of a support. So keeping that range in mind, I think this is going to be a very stock specific and a sector specific market. Be in the right pockets, be in the outperforming sectors, look for value stocks over growth. And I think there is still a lot of money to be made over the next few months. So I think the next real checkpoint for the markets would be around the earnings season in the second week of January and the budget, which follows thereafter. And I think we will review the setup then and there.
Okay, Gautam, morning, and let's get in your take then as to what the outlook is when it comes to the banking sector. Given that we have seen a bit of a comeback for some of these large cap marquee private bank names that have been laying low for the most part of the year, what's the next year got in store for banks? And share with us some names that you like.
Well, we have been making the point that banking is probably the sector of the next 1 year. I think there has been a big valuation and chart gap between a bank nifty and the nifty, and I think that's getting corrected. And in October, when the markets corrected about 10%, you had the bank nifty absolutely flat. And I think that's the point that we made all along, that bank nifty, just based on that data, should outperform. So the going has been good, and I do see the bank nifty moving towards a level of 55,000, which is our near-term target. And if you have to take a 6 to 12-month view, I think a 60,000 on the bank nifty is easily possible. Now, if you look at the top stocks, I'm very encouraged the way they have all played out in the recent past. HDFC Bank at lifetime highs and sustaining well. SBI coming back strongly. ICICI Bank sustaining at lifetime highs. So I'm still with the big boys. I think in every sector of the market, I'm trying to stay with the top 2 or 3 names because I don't think this is a market to be adventurous into. Any market correction and a lot of stocks can correct very quickly. So I like to stay with the big names, the top names, because I think the concept really is winner takes it all. I think in the current market environment. So I think the 3 names which I mentioned in banking we like. In the NBFC space, I think Bajaj Finance has been a favorite for a long time, and we've talked about it multiple times. So that's another stock, and that's another basket, NBFCs, which I think should do well after the recent RBI commentary.
That's the word coming in on financials, and I remember you were, of course, very bullish when it comes to SBI, but I want to specifically pick out Reliance because that's something which is really not working out for the markets right now. In the last few months, it's been in a consolidation of mode. Is that something which you expect to continue in 2025?
I don't think so. I think it's lost its way to a greater extent, and I think it's going to remain this way. I think a lot of people are trying to bottom pick on Reliance and trying to showcase all kinds of open interest, short data to say that the stock should turn around. But I don't think things work that way. You want to stay with the winners. You want to stay with the outperformers. In this very period of Reliance's underperformance of the last 6 weeks, look at what the IT index has done. Look at what top IT stocks have done. Look at what the banks have done. I want to stay in those 2 baskets because I think these 2 sectors of the market will continue to lead the market higher. So at best, Reliance is going to stay in a range. At worst, it continues to make a series of lower lows.
Okay. Are there any themes which are emerging up in the so-called mid and small cap space? And I'll just expand that question. When markets were at these levels last time, Vodafone, Suzlon, Yes Bank, they were doing exceedingly well. They've not participated. 3 months ago, there was like a mad rush in defense and railways. That's taken a back seat. With each correction, leadership changes. Where is momentum in terms of a theme or leadership in this market?
Yes, Nikunj, I think that's a brilliant point. And that's exactly the point that we made in many of our recent reports, that after the October, early November correction, the men have been separated from the boys. You can't, take a stock higher based on stories and narratives anymore. You want earnings, and you want earnings visibility. And all those stocks and all those sectors which have earnings visibility in the mid caps and small caps are doing very well. I could give you a great example in the form of Indian hotels. A stock which has been a favorite for us for almost 3.5 years. Today it's at lifetime highs. And many of the names that you alluded to, the Vodafones and the Suzlons of the world, have just not participated in the last 4 to 6 weeks, which is great because in August, September, our problem was anything and everything was being painted with the same brush, and there were narratives at play based on next 3-5 years of Excel sheets, which I just thought was getting a little out of hand. So the key message is market is only rewarding quality now, which is a good place to be in. And there is a very clear shift from growth to value. So I'm not looking at anything that is very richly valued because, there is a strong case of disappointment there. So coming back to the mid cap, small cap space, I don't think it's going to run away, but you have to be very selective. So the entire unlock theme, some of the auto ancillary names, some infra names, some FMCG names, they could probably stand out and not the grade C and grade D quality stocks.
Did you say FMCG? I mean, because FMCG is hardly showing leadership.
Yeah, that's correct. I think large cap FMCG hasn't done anything, and I think we remain quite negative there. So that's not a sector that we like. So FMCG and capital goods and pharma has been out of favor. But there are select mid cap, small cap FMCG stocks which we like from a valuation perspective. So that's what I'm alluding to. But let me also highlight here that there are two other pockets which we really like from a longer term perspective, and we've spoken about it a few times. Real estate and metals. I think the way DLF has come back, Loda Developers has come back, Showa has been sustaining. I think real estate is going on to make new lifetime highs and beyond. And metals, I think after all the news flow that we got from China, is just setting up for a move back to lifetime highs. So these two pockets of the market, we remain quite positive.
Okay, some of these pockets is something that you like at this point of time, but separately, what's the take coming in on pharma? Because that, of course, is going to come back. That's the word coming in. And metals as well, that you said is going to inch higher to lifetime levels, but any specific stocks that you want to call out there?
See, pharma seems to have lost its outperformance. And I think this happens in every cycle, that there is always one basket that leads a particular market trend higher. It happened with pharma in the last 18 months, but now it just seems as if smart money has moved from pharma to other sectors, and most of the positives for the pharma index is already in the price. So I don't think pharma is a buy at current prices. And we've actually moved most of our, trading or investment positions away from the pharma sector. But I think if you look at the metals index, I see the index moving back to 10,500 and beyond. And I think many of the top stocks led by JSW Steel, JSPL, Vedanta, Hindalco, I think Nalco, which has been a favorite. I feel all of these stocks can really outperform if somebody has a 6 to 12 month perspective. There could be near-term volatility, but if you have to play the bigger trend, I do believe metals is where the auto index was a couple of years back.
Where are some of these consumer tech and fintech stocks headed, Gautam? Because that's where the action is really there, and now they are in F&O, so even more exciting.
Yeah, it's a good point, and I think it's a debate which I keep doing with a lot of my analysts. Zomato at 3 lakh crore market cap. Can you keep selling this story, at such high valuations? And I do believe that there are certain pockets in the fintech space which I think are now fairly valued. So I think easy money making phase is gone for a lot of stocks. But so you have to be very selective. I'm not saying that Zomato is a sell. All I'm trying to say is that it might not keep moving at the same pace, and you need to be very careful making fresh commitments at these prices, which I don't think is justified. But within the fintech space, there are many other companies that are really doing well and are standing out. For example, a car trade, which has been a favorite for us and we've recommended it to our clients multiple times in the past. We like it as a good story for the next 2 to 3 years. A Nazara Tech, a great play on gaming, sustained very well in the October correction, doing very well in the recent past. That's setting up well. But some of the other names like Swiggy or, many such similar names which people have been talking about, I'm not a big fan. So I'm being very, very choosy there.
So Gautam Shah, let's make a portfolio for our viewers. We'll call it Gautam Shah's portfolio 2025. So what would that portfolio have? What do you think would be the positioning of that portfolio? And if to make a portfolio of, let's say, 8 to 10 stocks, and you're free to choose across market caps.
Yeah, so I like to stick to sectors and I like to stick to the top names. I think in the banking, I've already given you 3 names which I like. I think that would definitely be top of my list, and that would be 30% of this imaginary portfolio that you wish to make. So that's number 1. Followed by IT. I think stocks like TCS, HCL Tech Mahindra, eClerx, Mastech, this entire basket of stocks I think will outperform. So that could form another 30%. So you're up about 60% in just these 2 sectors. And then the balance 40, I would like to move to real estate and metals. Again, I'm sticking to the top 3 or 4 names in both of these sectors. So that takes me to closer to 100. I want to stay away from the high flyers, the defense, railway, capital goods, FMCG, pharma, infrastructure, auto. I want to stay away from this entire basket because I don't see leadership and I don't see them doing well anytime soon.
Okay, so going for a bit of a low beta in terms of the movers in that sense. We have talked about a lot of sectors, Gautam, but what about the frontline index itself? Are we likely to make fresh record highs soon, or do you think next year is going to be pretty sideways? And also Bank Nifty has been doing quite well for the last couple of months. Given you're that bullish on banking names, is it fair to assume that in 2025 Bank Nifty will do much better than the frontline index Nifty?
I think you will see a flash on the screen very soon that the Bank Nifty makes new lifetime highs ahead of the Nifty. I think that's the stance that we have maintained in the recent past. And I do see the Bank Nifty doing exceedingly well over the next 6 to 12 months. So I'm quite confident that the Bank Nifty will get to new highs quickly. But for the Nifty, I think it's going to be a bit of a challenge. I don't see new highs in a hurry. I don't see the recent low being challenged in a hurry. And the ceiling, as I said, is about 25,500. So we'll have to review it as we get into the earnings season. But as an analyst, I'm very happy if the Nifty just stays in a broad range for a few months, consolidates, digests all the news flow locally and globally, and it becomes a stock pickers market because, then there is no greed in the system, there is no euphoria in the system, and good stocks keep doing their good things like what Indian Hotels has done in the recent past.
But if you have to, let's say, choose from the mid-cap space, and if you have to make a portfolio of mid-cap stocks, you've made a large-cap portfolio for us. But let's say this portfolio is only for mid and small cap investors or semi-large cap. What would that portfolio have then?
See, one key point for retail investors and HNIs is that if you want to play the mid cap and the small cap story, please stay with the top 200 names. Because what has happened in the last 6 weeks is that the small cap index is at lifetime highs. But when you speak to a lot of people on the street, they say that their portfolios haven't done well because they were all in narrative stocks or story stocks. Whereas all those stocks which had very good institutional interest and which are obviously part of large mutual funds have done very well. So I think between now and say December 25, sticking to the top 200 mid caps and small caps is extremely important. You don't need to be a stock picker unless you are professionally into it. Do not do any sort of work on hearsay. I think the market is going to be a lot more challenging into the next 3 to 6 months. But sticking to the top 200 and maybe going the SIP way or the top funds way is still the right path for retail investors at least.
All right, Gautam Shah. Wonderful to have you on ET Now. Thank you for joining us. And needless to say that whatever we've discussed, Gautam and his clients have vested interest, and I'm going to speak that disclosure on his behalf. So wonderful to have you on ET Now, and best wishes for 2025.
Thank you, Nikunj, to your entire team as well.
If you like this video, then like, share and subscribe to ET Now.